Website you love. But
Hey guys, good morning everybody. Today is what is today? Today is Wednesday, December 17th. It is 6:27 right now. We got market opening up in about 3 minutes. Um yeah, if you guys look at the list of trades for today, there's not very many trades listed. Yeah, a lot less than the previous days. And for the target entries, there's only two target entries for today. So we'll see if we get those target entries. Hopefully they play out as we expect. But yeah, it's just there's just not as much today. Looks like because of the market volatility the past 2 days, things have kind of just weighed down a little bit, which is not it's not a bad thing. Obviously I'd like more quality entries, less but more quality entries versus more and less quality entries. So we'll see where this ends up going. Um, just another heads up um with the hedge fund. So unfortunately, today I've got to take everything down from the K2 trades page. So if you guys don't have access to the indicators and you guys want it, I mean, today's the day to do it. If you have time to do it, if not, everything's pretty much going to come down. You can probably reach out to me and I can probably work something out to get you access to it. But for the most part, um, the basically everything on the K2 trades page is going to have to come down for the most part. So like yeah, the sign up buttons are gonna have to come down. I'm gonna have to change the welcome page over here. Basically, the regulators want me to. So what they were telling me is that basically I can't like you got to choose whether you want to be an educator or whether you want to be a hedge fund manager, and I can't do both. I mean it sucks, but it is what it is. Yeah, they just said you have to pick a lane. It's either you're going to educate and you're going to teach your strategies, or you're going to be a hedge fund manager and you're not going to teach at all. So. Yeah, if you guys still want access to the indicators or if you guys don't have access to the live room or anything like that, I mean, this is probably the last day to get access to it. I have to take everything down or else we can't really move forward with the hedge fund. So, uh, yeah, I know, Lila. The website's still going to be up. So for you, Lila, I mean, for all of you guys who have access to the indicators and the strategies and, whatever it may be, the website will still be up. So if you go on the website and try to sign in, it'll still be there. It's just for new people. They can't unlock access or use it. So you guys are fine. It's just for the most part, new people. Wes is asking, are you still going to be doing the live? Yeah. So if you guys are on the Zoom, perfectly fine. Nothing's changing. This is just for the general public. So people can't like, randomly find me on YouTube or stuff like that. So everything is not changing for everybody who's here already. But but it's just for new people for the most part. CJ's asking, will we still be able to renew subscription on the website? Yeah, well, yes and no. So you just have to let me know, CJ, if anything, if you need some updates or anything like that, and we'll have to do it through the back end. Um, there just won't be a way for people to just like randomly sign up, right? Like if someone wanted to sign up and get access to the indicators or the Zoom or whatever it may be, there's not going to be any links here. So if you click on these links after today, they're just going to be dead links, or I'm just going to take them off completely. And like this thing down here is going to be taken off so that nobody can sign up. It's really weird how, I mean, it's not weird. I get what they're doing, but I just find it weird that they don't allow for both, right? They don't allow you to be a trading educator or a hedge fund manager. It's like yeah, it's weird. I mean, but if you look at it, like there's like a couple other people, like you guys have probably heard of like Lance Bridestein and stuff like that, who traded at S&P Capital and stuff. Like he has a trading course now too, but he doesn't manage any money anymore. So he just kind of teaches. So I could see that now because before he was like a full-time trader and now he's just a full-time teacher for the most part. So yeah, I mean it's there's a lot of oversight once you get licensed. I'm probably the only person online that's actually licensed and trades live, you know. That's one thing too. Like they made it a big deal that I can't trade live uh as a hedge fund manager. I don't know. It's It is what it is, but it's just a change. So, I mean, it's all good, guys. Nothing's going to change for anybody who's here that's already here. They said that whoever is already a member of K2 Trades and the live sessions and stuff like that, nothing's changing for you guys. It's just they don't want me to branch out to the general public. So, like, new people can't find me and stuff like that through social media or YouTube or through the website. Or if they do find me, they can't use my strategies. All right, guys. So market is now open. If you guys took the breakout here was for a sell immediately at 6:30. It came down very quickly and it came up very quickly as well. So it wasn't one of the listed entries or target entries, so obviously not one we'd be looking to take. We have one listed entry that's going to be coming up in about 4 minutes. It's going to be against momentum. It has a 7.37 max drawdown, overall probability of 50%, buy percentage of 42, sell percentage of 53, and a profit factor of 1.987. So if you guys want to take that one, it's going to be for a sell. I'll be looking for it and I'll be marking it up for you guys, but I'm probably not going to be jumping into that one specifically. Looking over here, everything's pretty bullish, so I probably wouldn't be looking for sells right now. All right, so we'll be waiting for that entry. That entry's not coming up anytime soon, but when it does, we'll catch it. Let's see. Daniel said we can log in to our accounts directly through Teachable. Yeah, so there's nothing wrong with your guys' accounts, Daniel. Everybody who's here already and you guys have access to the indicators and the strategies, don't worry, you guys are not going to lose access. I've already come to an agreement with them where everybody who was already in previously before today, you guys are perfectly fine. Nothing's going to change for you guys. It's just for new people. Like, for example, if someone was to, like, if you told your friend about me or something like that, and they want to learn how to trade or they want to use my algo and stuff like that, they wouldn't be able to sign up on the website. They could technically reach out to me and I can probably work something out, but I'm not supposed to be making it open to the public anymore. They just don't want people using my algo. Just with like any other hedge fund, right? That's why you never see hedge funds teaching or you never see hedge funds sharing their strategies, their theories, any of that stuff, really, because they're not supposed to. It's against the rules with regard to the regulatory aspect of things. But I get it, the NFA and like just in general, like they don't want retail traders like regular traders to know what the big players are kind of doing in a sense. That's why nobody knows like, you think about it, none of the hedge funds use technical analysis, right? Like all the stuff that you guys see that's taught on YouTube or the stuff that we're even looking at right now, nobody uses technical analysis. They might use it as a confluence, but they don't use it for their actual strategies. Like, for example, for our algo here, we don't really care about what's happening technical analysis wise, right? We're just looking at my list of trades and then we're basing it off the probabilities. So there's nothing wrong with technical analysis. It's just it's not something that hedge funds typically use. It's not their starting point. Starting point is based off quant data or backtest or whatever it may be to provide probabilities. And then they just use technical analysis as a confluence whether to take the trade or not. And that's kind of what I do as well. Technical analysis is mainly for retail traders, which there's nothing wrong. Technical analysis does work to an extent, but it's not what the big players are really using. So that's why you see so many videos about technical analysis. You don't see very many videos about quant trading, right? You probably won't see any videos about quant trading. Um, you'll probably see videos of interviews or theories and stuff like that, but you don't actually see videos of people actually explaining their quant strategy. So yeah, but you guys are good. You guys are good because you guys are going to grow with me. Obviously my main focus is going towards a hedge fund. So as we continue to grow and as we continue to get better with this algo, you guys are coming along with me for the ride. So let's make some money. That's the main goal here, guys. We're gonna make some money, right? The main goal here is to focus on trading, not really marketing, not selling anything, no teaching, none of that stuff. Really just kind of improving this algo and building from here. So we have an entry right here at 636, guys. This is not going to be a target entry for me. So I'll just share it with you guys. This right here has a 7.37 max drawdown. It's going to be for a sell. So if you guys want to jump into this here, you guys are more than welcome. It doesn't look like a super good trade for a sell because you can look over here across the confluences, like I mentioned. I'm not using technical analysis over here, but I'm just looking at the candles with regard to see where price is likely to go. The lower time frame is the 1 minute and the 5 minute are starting to push down. We're getting a nice wick on the 10 minute and the 30 minute and the 1 hour. But the 4 hour here is still a little bullish. So if that's the case, we kind of have some choppiness right here. But again, if you guys want to take this entry, this is going to be a sell entry for, and there we go. It's currently running a sell entry against momentum. So again, this thing has a 7.37 max drawdown. This indicates that there's about like 3.5 losses max that happen back to back. Has an overall probability of 50%. It's not super high, but it does meet the criteria there for my algo. I'll put the criteria here again as well. So max drawdowns below 10%. Win rate is at 50%, so it just meets the minimum criteria. The buy percentage is 42, sell percentage is 53, so none of them meet the target entry criteria. And the profit factor is 1.987. So that means that for every loss, there's 1.987 wins. So basically a 1 to 2, if not 1 to 4, if you really want to break it down with the 1 to 2 numbers. All right, but again, this is not an entry that I'm taking. I don't really take against momentum trades. Not to say these trades aren't going to hit, but I personally just don't really take them very much. We can keep following the candles over here to see how they're moving. I mean, for the most part, it looks good. We have a nice wick on top right here, nice wick right here, nice wick right there, and price is coming down pretty smoothly. So we'll see what happens here. We have another entry coming up in a few moments. It's not going to be an entry that I'm looking to get into. It's a listed entry, but not a target entry. So we'll see. Yeah, CJ said, I get it. It's part of the business and it's something you've been working towards for years. So we all knew this was eventually going to come. Excited for the new journey, honestly. Yeah. I mean, this was my plan all along, right? I started K2 Trades a long time ago just to create a community for us to kind of trade with to help me become a better trader. And I've been running this community for, I don't know, what is it, 10 years now? Over 10 years. And we've come a long way. We've come a long way. My end goal with trading is to not be an educator, right? I didn't really want to teach anymore or mentor any of that stuff. I really wanted to just make all of my money, if not majority of my money from trading and start a hedge fund, which we're currently at. So yeah, we're making that leap from retail to institutional, from educator to, full-time trader for the most part. Full-time trader that's just trading. So but I'm glad you guys are still on, that you guys are still going to be on this, journey with me for sure. Okay, right? It's better to have a close-knit group where I can share my strategies with just you guys and not the general public. This won't, there won't be as much alpha decay since there's only like a handful of people here versus me sharing this with like the general public. The crazy thing is like the regulators, they actually so they go to my website. This is how they knew all this stuff was here and like how YouTube is and stuff. They go to the website, they literally click on every link. They click on every link and they purposely try to sign up. They purposely try to sign up to see if there's a way to sign up to my strategies or learn my strategies and stuff like that. And and they take screenshots and they send it to me like, hey, you said you were taking this down, it's still up. They're pretty strict about it. They have like a whole team that just kind of, runs on compliance. So yeah, there's no way to really kind of sneak by it. Plus the fact that the names are the same, Cody Kai Trades, Cody Kai Capital, there's no way around it. It's gonna be um, they're gonna intermingle regardless. All right, so I'm not in this position right here, guys. We have the other position running, so actually this is gonna overlap with the other one. So for me personally, I wouldn't go with this one. I would go with the next one. We have the next one coming up right here. This one's kind of tricky. So this one over here is at 641. It's with momentum. It has a max drawdown of 10%, overall probability of 50%, buy percentage of 55, sell percentage of 45, and a profit factor of 2.027. So this one over here is actually a lot better. This is going to be at this close of this candle. Again, we don't take against momentum trades, so I'm going to put this in the notes. It was a loss, but no trade. This one over here is about to come up. This one looks like it could be pretty good because it's all bullish right here, right? If you guys want to take this one, feel free. It's not a target entry, but if you guys want to take it, um, this is going to be one of the listed entries. So I'll mark it up for you guys here for those of you who want to take it. Not getting into this one. Like I said, I'm only taking my target entries, right? ATR is at 30 right now, so it's actually pretty decent. All right, so this is the 641 entry. Again, I'm not in this position. We do have some choppiness here. Price is kind of going back and forth at the moment. This is not a target entry. Again, it's a listed entry. So I don't take listed entries. I only take target entries. Super choppy today, looks like. Price just going back and forth around this area. We're just marking this up for documentation, but it's not one that I'm specifically, well, obviously I'm for sure not taking this one. So we're gonna document that right there. That right there was a 641. It's just for the spreadsheet. The next one is going to be a target entry though, so I will be looking at into the next trade, and we'll see where that is. Yeah, Roland said, "Damn, end of an era. I got back at the right time. You talked about all this for years, and now it's here. Congrats on the forward move." Yeah, definitely, Roland. I know you literally got in exactly at the yeah, because you just rejoined, so you got in right exactly at the time. But so if you guys still want access to it. I mean, you guys can just reach out to me privately through the Discord or something like that. Uh, Obviously, I'll try to find a workaround, but it's just not going to be for the general public. Man, I fucking hate being sick. I was sick 2 weeks ago or 3 weeks ago, went away, and now I'm sick again. It's weird because I never get sick. Uh, just hard to breathe. All right, so we have the next entry is going to be a target entry, guys. So I'm actually looking for this next one. I'm going to be looking to get into this next one here. We got a couple minutes till then. Here, I'll just draw, or this is what I was doing. I was doing this before, right? So I was drawing the market regimes. Yeah, so I'll continue drawing these market regimes. So basically, like we got going on right here is price is currently, I mean, market regimes right here are a little tricky. They don't really look like they're very smooth, right? So we had a consolidation phase up here, and then price is starting to come down for a downwards trend, but it's not very strong. It's kind of going sideways right here as well. I think it's better if I just mark up structure instead of those market regimes in a sense. We could use Massage's market regimes here. So yeah, he said bearish momentum. That's what I was expecting when I had this marked up going to the downside. It's not very strong, but price is coming down nonetheless. So again, like I mentioned before, guys, I don't really use technical analysis for like to decide my entry. I just use the technical analysis here really just for confirmation. So you can see here that price is really just kind of ranging between these two structures right here. It's trying to come down. The target entry is coming up in a few moments. Let's see, the siege is actually not here today. I was going to ask him what he thought about this one, but we do have the entry coming up right here in a few minutes. If you guys are looking to take it. So the entry over here is going to have a 7.70 max drawdown. This says that it basically has a little over three back-to-back losses typically. It has a probability of 60% for it hitting. and has a profit factor of 2.886. So the numbers here are pretty good on paper. Now looking over here at the buy percentage, it has a 53% probability for buys and a 71% probability for sell. So obviously we're going to be looking for a sell here, right? Um, the one thing that's kind of throwing me off here is the current market movement, right? It's not very consistent. It's kind of choppy back and forth, back and forth. We don't really like that when we're taking certain entries. The one thing too that I don't like, which I'm seeing right now, is that we have this pending momentum, right? That is uh that is one of the things here that I don't like, because we don't want a pending momentum when we're yeah, and if this thing here closes, then there's just not going to be there's going to be a no entry for the target entry. So we had a pending momentum there. The target entry is coming up shortly in about a minute. Okay, so I'm not taking this one, guys. See how there's a pending momentum right there? That's one of the things that we talked about, right? We talked about that being a red flag. So I'm not getting into this one right here. If you guys want to get into it, I mean, feel free. This is going to be a target entry for a sell. Price is sitting at the structure. Let me go to our main chart. This could very well come down though. It could very well come down. It's just, we talked about this where like if there's a pending momentum on the candle, typically not one that we want to get into. But if you guys want to get into it, it is a target entry. Again, it has the numbers are great on paper. 7.70 max drawdown, 60% probability overall, 2.886 profit factor, and shorts have a 71.43% probability. So if you guys want to jump into this, feel free. This is going to be the entry right there. Entry is currently running in profit. Confluences here are they're looking good for the most part. I mean, they're a little mixed, but they are looking good for the most part. I mean, well, like I said, this here didn't meet my criteria because there was that pending momentum there. Yep, good thing I skipped it because look what happened. That momentum's going to come right back up right here. I already know it. Yep, there we go. See that pending momentum? That's it. It's a key factor. That's why I created this alert to begin with. When you guys see that thing flickering, that means that the momentum is ready to flicker to the upside. It's ready to blow up. Um, And that's why I decided not to take the trade here. We already have that rule in place. I'm going to put it in our notes over here. Um, I should have looked at that for the 641 as well, but it's okay. I didn't really bother to take a look at that. But flicker, no trade. Okay, let's put that in the notes there. All right, there's another entry coming up, but this one's not going to be an entry. So there's one at 650. It has an 8.62 max drawdown, 55% overall, 53 for buys, 57 for sells, 2.185 for profit factor, but it's for a sell. So if you're going with momentum here, we have a bullish momentum already. So it's going to be no trade or no entry. The next one's going to be a target entry. So I'll just put the statistics over here again. Yeah, it's really important that you guys understand how this momentum works. Um, because we're trading based off the momentum and you don't want to be fading momentum, of course, right? So the next one actually looks really good. Here's the next target entry. If you guys have the list of entries, it has a 7.02 max equity drawdown, 60% probability, and the profit factor is 3.13. We don't really get above three very often, but this one is above three right there. Looking at the directional moves, it's 45% for longs, 77% for sells. So obviously we're going to be looking for sells here as price continues to move along. Yeah, CJ said price is stuck on the Asia high, sitting out because of the sessions. Smart. Daniel said market is straight chop. Yeah, exactly. Straight chop from like this whole area right here, right, Daniel? So that was another consideration that I was taking into account, but obviously the main reason I skipped this trade here was because of that pending momentum. I knew this was probably going to happen, and I wasn't going to take that risk, of course, right? Because we've seen this happen very often. That's the whole reason why I created this alert here. So basically, if you guys hear that ding noise, I'll put up the volume a little bit. If you guys hear that ding noise, that just shows that there's a pending momentum available, and price is just chopping within this area, right? Like we talked about before, we try to not use technical analysis very much, but we only use it as a confluence. It's not necessarily the end all be all. Like I won't be skipping trades just because price is choppy. I'm mainly skipping trades because I'm identifying momentum, right? Because the whole strategy is based off momentum. You guys can see the strategy's been on a pretty hot streak lately. So yeah, I'll be looking to get into this one once time happens, but as of now, we're just gonna kind of sit tight and wait. iPhone's asking, how about flickering momentum in the direction that we want to take the trade? Could that be a good indication? Yes, 100%. So I personally, I'm following the strategy, how it's supposed to be applied, but CJ and a couple other people here, they use it to their advantage. So for example, here, if you're looking for price to turn against iPhone, like say you're looking for price to reverse on you, right? Because you have an against momentum trade coming. In a situation like that, you can anticipate it coming, right? Because you see a flickering momentum and then you have that against momentum trade. So you know price is probably going to push down. So that's typically what a lot of people are using for the most part if you're waiting for that turn the other way. This is very similar to the V1 variation, right? So if you guys remember back, like way back before, we used to apply the strategy called the V1 variation, right? And the V1 variation is we would identify a double body or double wick. And if we saw pending momentum flickering the other way, we would be ready to jump into that position because we knew that as soon as we got into that double body, double wick, it was going to flicker to the downside and go straight to our target. So this goes hand in hand with something that we've used in the past. Again, another signal fired right there. So basically, whenever you hear that noise, that means that there's a pending momentum the other way. So just be aware, right? And there you go. There goes the pending momentum right there. So you can see price is trying to push back down. It's basically faked out up here and it's trying to come back down here. Nice. Paul said he had a stop order at the orb that lines with the 10-minute. Asus is asking, how can we set up the alert with pending momentum? Okay, yeah, so do this. Go to alert up here. Make sure that you have the momentum indicator on your chart. Click this drop down or just have it set to YM. Then go to condition, click on Cody Kai momentum. And then right here, click K2 signal fired. This means that it's going to give you a signal every time it comes up, whether it's a buy or a sell. And then you can set this to 1 minute or just have it same as chart and then have it once per bar. So when you have this once per bar, it's going to indicate, it's going to give you an alert per candle. So it's not going to give you multiple ones per minute, just for that minute. So you know that it came up at 6:55, right? And then right here, expiration, depending on what you have for your settings, you can have it set to open-ended. I have it where it never turns off. I just turn it off manually at the end of the session. You hit create, and then it'll come up right here on your alerts. And then it'll show you your log. So this is cool here because you can see that. So for example here, see how we haven't had a sell momentum yet? You can see for every minute it's been coming up for the most part. It came up at 6:55, came up at 6:54, but it hasn't came up before that, right? So if you see a whole list, like say we see a cluster of alerts, like for example here, another alert right there, right? Every single minute we have a sell signal. This is indicating that the sellers are trying to get in control right now, right? It's telling you like, hey, price is pushing up, but the sellers are not letting price get any higher. So if you get a sell momentum like that a bunch of times, you already know you probably shouldn't take a buy here because price is going to have trouble getting past this resistance, right? So just something to keep in mind, guys. There's always these little things that you can look at to help you identify certain things. So like I just mentioned, I probably wouldn't take a buy here because we keep getting these sell momentums, and it shows that whenever price pushes up, it gets knocked right back down. pushes up, knock right back down. And that could help also with like your other trades. Like if you want to take an against momentum or if you want to take a reversal type entry, like if you see a double body, double wick, if you see a double top, if you see an engulfing candle, any of that stuff, really, that stuff could be another confluence that price is likely to flip the other way. So, and again, these are just confluences, right? There's no um, specific confirmation that it's going to help with you. It's just really confluence in the direction of your trade. All right, so looking at this again, guys, we have, give me one second, I'm gonna blow my nose. I can barely talk right now. All right, guys, I'm back. Let's see, let's take a look at that orb that that Paul's looking at. Yeah, so if you guys took the 2 minute orb, obviously it flopped right here, whether you took it on the close. Again, we've been talking about this over the past couple of days. The orb is really tough to find consistency with because everybody uses it. Um, so this is the 2 minute orb. Let's check the 10 minute orb. 10 minute orb over here, it looks like it's still lost. If you took the break or if you took the retest, yeah, this thing draw down about 60 points. Um, let's check the 15 minute orb, right? Those are like kind of the main ones that people use, or 2 minute, 5 minute, 15 minute, 10 minute. Those are like the really common orb entries that people like to take. I mean, same thing here. The 15 and the 10 are basically the same. Either way, all of the time frames or the time orbs here looks like they would have lost. Again, there's nothing wrong with taking the orb. I personally used to like it to an extent, but it's just not as consistent as I would need it to be. I personally think the 2 minute orb is probably the best one. It's quick in and out. Let's see. Paul said, look at the 10-minute time frame. So you applied the orb with a 10 minute, Paul? Okay, cool. Where'd you get in from? You got in from right here? Or I mean, I'm assuming. Because there's a lot of different ways to apply it. So for me, I would do the break and close. If you do it on here, you got in on this one right here. Okay. Okay, got you. So you basically just wait for the first, or I mean, I guess the first 10-minute candle, you just wait for it to close and you look for it to break. Okay. Yeah, so you're doing it a completely different way from like what a lot of other people do. Like when you say 10-minute orb, the way that I see it is because the first 10 minutes would create the orb high right here, right? This would actually be the orb high and this would be the orb low. So like, yeah, I'm not sure why you got in right here. But usually people, if they're taking the orb high or orb low, they mark up the orb high right here. That's why I have the box right here. It's the high of this candle and the low of this candle. So people usually don't get in until way up here. So, I mean, now you probably have a different variation to the orb or you probably identify it differently. But the traditional orb, this is how people would apply it. That's why for me personally, I like the 2 minute because it helps with, getting in quicker. But everybody does it differently. Anyways, if you made profit on that, nice work, Paul. There's just so many different variations to the orb. All right, so we still have that pending momentum, guys. Again, like I said earlier, see how price faked out up here and it came right back down? It's the same thing that I was just mentioning, right? So again, right here, look at this reversal pattern. There was a engulfing candle, right? See how this red candle engulfed this one at the high? So we had an engulfing candle at the high right here. This is where the sell would have been taken if you were looking for that reversal back down. It's actually a pretty good entry, depending on what your criteria would have been. For the reversals, I probably wouldn't go for anything too crazy. I probably would just go for like a 40-point move, but this right here is this right here is coming back down further. So our next target entry is not for like another 20 minutes. If you guys have any questions, feel free to put your questions in the chat. Let's see, Brock. So I guess I'll have to learn the orb entry and how it works. There's too much mention about it, and I wonder if it's still profitable considering the masses of retail traders. I guess you kind of answered your own question. It probably isn't, Brock, right? Because the alpha decay is there. If everybody's using the same strategy, it's not going to work. Um, it's so the reason for that, and a lot of people don't really realize this, is that it's not the fact that people are trading against you. So when we talk about alpha decay, it's not that these hedge funds and stuff are trading against you. It's that all these algos that are running, in the background, because there's a lot of algos running. Like there's so many algos from a lot of these different hedge funds, especially the high frequency ones. Um, their algos identify inefficiencies in the market, right? So if like a specific strategy is working very often and a lot of people are applying it, these algos are going to find the inefficiencies and they're going to trade the reversals. So you guys just have to like put it in perspective. It's not that they're like purposely looking to stop you out. It's just that they see that, everyone's applying this specific strategy. It's easy to just fade them the other way, when it gets to a certain point. But yeah, I mean, if you want to learn it, Brock, the orb strategy has been around for forever, basically. It's been around forever. It's been a long time since, I mean, it's been like since the 90s. If you research the orb is like probably it's as old as like support and resistance, basically, in a sense. It's one of those really, really old strategies, you know. Um, Yeah, Barack said when Apex Funder trading had so many campaigners on YouTube, it was everywhere. Yeah, because the reason why a lot of people like to teach the orb is because it's a really simple strategy. It's a very basic and simple strategy. The thing is, it doesn't work all the time. Like it's very seasonal with how it works. So the thing is, a lot of new traders, they want to learn the orb and then they just keep. So it's like a cycle, right? People will teach the orb all year round. There'll be time periods where it works pretty decently. People can pass evals applying it, and then there's a lot of down periods where it starts to fail, and people just blow accounts. It's like recycling, right? So it's like people will buy an account, pass it, and then fail it once they get to the PA stage because it just doesn't last long enough to be profitable long term. And I know from experience because I used to apply the orb, right? I think we applied the orb for a while and we passed evals and we were good for like maybe a month and then it just goes through like really, really heavy drawdown phases. So, let's see. CJ said back to back market flow V2s. You can literally surf the market right now. Yeah, so what CJ is doing is catching the market flow V2s as they come back down and bounce off the pivots there. Nice work. Brock is also in the continuation. Yeah. Yeah, Nick said, yeah, I don't like the back and forth. After that solid drop yesterday, not surprised by the sideways movement. Yeah, no, I agree with you too, Nick. It's I mean, it was weird that we had NFP on a Tuesday, right? That should have been the first sign to me that, hey, this might be a weird market today. because of NFP. I was just talking to Nick about that yesterday. So Nick was like wondering why NFP was on a Tuesday. Everything's kind of pushed back because of the government shutdown, right? If you guys remember the government shutdown that happened 2 months ago or last 2 months ago into last month, everything's pushed back. So we had NFP on a Tuesday, which I've never seen ever in my whole trading career. I've never seen NFP get pushed to a Tuesday, and not just any Tuesday, like a random Tuesday. Um, yeah, it was very, very unusual. Yeah, because we're middle of the week. Like this is supposed to be Fed week, I believe, right? Let me check the calendar. Yeah, it's Fed week. We have the Fed speaking pretty much every day this week. Or no, it's CPI week, sorry. Last week was Fed week. They started to change the weeks around too. The third week used to be Fed week, but now third week is CPI, PPI. So tomorrow we have CPI, which is Consumer Price Index. It's inflation news. We have jobs data, and then Friday I think we have PPI, right? Or no, we don't. Yeah, I don't know. The news is kind of like screwed up. There's just everything is different. We had a pretty good schedule before. It was NFP first week, CPI the second week, Fed week the third week, and then slow fourth week. But everything is kind of all over the place now. We have CPI on Thursday, which is normal, but not during this week. And then we got PPI. Plus, we have Christmas next week. So, it's going to be a short week next week. We got Christmas Eve on the 24th, and then Christmas on the 25th. Yeah, but we don't really have news today. So we had the Fed speaking earlier this morning. Then we have gas stock change happens every Wednesday. And yeah, I mean, I guess we'll go from there. Yeah, Peroxide is looking for news too. Let's see. Justice is asking, what's MF? Sorry, I got to jump in and out of the call the next few days. Yeah, no worries, Justice. MF is market flow. So um, I don't know if the strategy is on the court. I mean, there should be a strategy video there, but the market flow strategy is pretty simple. It's basically, sorry, one second. I just got to blow my head. Oh man, God, I hate being sick. I can barely breathe through my nose. I try to blow, but I couldn't blow anything out. Anyways, what I was saying, Justice, is for the market flow V2 strategy, it's a very simple strategy. You're basically looking for trend to be established in a direction. So, for example, we have a bullish momentum here, right? Price is above the pivots. I don't have the trend meter down here, but I can assume that it was green. And price is basically bouncing this way, right? So, basically, what you're looking at here is you're looking at the flow of market. When price pushes up and it retraces back down like this, what CJ is doing and how the strategy works is he puts a pending order in between the pivots right here, right? It's just waiting for price to pull back and then bounce off it. So like basically this is what he's doing here. He waits for it to push up, retrace, continuation of higher. And he does that per momentum, right? So one bullish momentum here, done with, right? Again, right here, price was bullish, price came up. Same thing right here. Pending order would be kind of hanging out right here in between the pivots one and two. And this one over here obviously didn't hit, but the trade would have been canceled once the opposite momentum came up. So yeah, if you want to look it up, it's MF V2 is market flow V2. You can look at the original market flow or market flow V2, whichever one you prefer to look at. Same thing, same concept. The concept is basically just you're looking for a trend to establish and momentum to establish, and you're looking for it to balance and continue up higher. That's all it is. Um, as you know, like pretty much all of my strategies, they kind of align with each other, right? We have market flow V2, we have MPS V2, it's the same thing. It's like MPS V2, you're looking for the same pattern. They're all market continuation type strategies. Bullish momentum, retracement, continuation, push up higher, right? Push up, retrace to the pivots, push up higher. If you look really, really far back, there's another strategy called the snipe strategy. The snipe strategy is very similar to market flow V2, except instead of waiting for or instead of putting a pending order there, you're waiting for a confirmation. So if you guys look at any of my strategies, they're all momentum based and they're all trend based. So like every strategy is basically looking for something like this type of pattern. It's just use different tools to confirm it, right? So you'll use either the momentum indicator, the pivots, the trend meter, etc. But you're just basically looking for this pattern, and then you're using my tools here to basically visualize it. Because I can see it without the tools. Like I mentioned this before, I've created these strategies because I made it so that I can teach people how to follow what I'm following. Because it's not as easy if I take off all my tools here. Like say for example, I take off my pivots, I take off momentum, I take off I mean, everything, right? If I take everything off here, it's going to be hard for me to show you how price kind of pulls back to certain areas, right? But the whole reason of me creating these indicators was so that I can show you where price is pulling back to. And this goes back to when I was mainly focused on being a trading educator, right? Um, I mean, again, like I've been trading for so long, I don't really need the tools here. It's just that it's all for visualization purposes. That's why for the algo here, I don't even use the tools. I really just go off the time. Ross is asking, is the trend meter a Cody Kai indicator? Yes, that is correct, Ross. If you go to your indicators here, go down to your invite only, the trend meter is going to be right there. Cody Kai trend meter. Yeah, so if you want to add the trend meter to it, I mean, you could add as many tools as you guys like, right? And you want to set this to chart only so that you can see what's happening on the 1 minute. This one's based off the Ichimoku cloud. So if you wanted to go back and do this by hand, I mean, you can go back and do it by hand, identify the trend meter. But the yeah, the tool is still there. All right, let's see. Let's see. Daniel mentioned the sell signal does not want to close. It's been flashing for 20 minutes. Yeah, right. You can see here it's trying to come down. It's really trying to come down. Like it came up here, faked out, came right back below. Um, But yeah, it's having trouble really coming down. Everything's bullish though. So if you look over here, market structure is bullish on the 1 minute, 5 minute, 15, 30 minute, 1 hour, 4 hour. Looking over here at the overall trend, everything's pretty bullish. 1 minute, 5 minute, 15 price is above the pivots. Trend meter's green, pivots are angling up. Same with the 30, 1 hour, and 4 hour. So, I mean, ideally buys would be the direction here, but you can see that that sell signal is trying. It's really trying to come down. So looking at the candles here, it actually, you can see the sells are starting to come into control, right? If you look over here on the higher time frames, the sells are actually, the candles are red. So 30 minute, 1 hour, 4 hour price is trying to come down. It's just the lower time frames are not letting it follow through. So they're kind of fighting against each other right now. The lower time frames are starting to, or trying to not let it really push up or push down. But the higher time frames over here, you can see the candles are red. They're trying to come down. They just don't have that behind it, right? So looking at this so far, I mean, you can see over here, this is a daily candle. So this is the daily candle price here is currently at the point of control from Tuesday. So this is Tuesday's point of control yesterday. This is basically where price is balanced. Now that price is balanced right here, it's either going to bounce off this point and come back down to today's point of control, or it's going to break above and push up to the value highs from yesterday or from earlier this week. So there's just two ways of this happening. Ideally, what I'm seeing here and what I can see maybe happen is price is probably going to come back down, right? I think price is overextended at this point. You can kind of see your consolidation, push up, correction. But again, you would have to like look at a lot of things. So like this is why I don't like and so we talked about technical analysis being like for retail traders. The problem with technical analysis is that you can analyze things in either direction, right? There's no guarantee that price is going to go up. So that's why I don't like using technical analysis anymore. I am a technical analysis trader by heart because I've learned to trade technical analysis my whole trading career. But I can give you I can give you 10 good reasons why price is going to come down, right? I said price here is overextended. It's pushed up too high and it's ready to come back down to this point of control, right? That's my argument that price is going to come down. I can also argue that price is going to come up, right? So I'm like, okay, price is consolidated, pushed up, consolidated, pushed up, consolidated, push up to the value highs, right? This is why people, this is why trading educators and like, trading gurus get a bad rap because you can skew the explanation to basically trick a beginner trader either way, right? You can influence, like I can influence you to think price is going to come down because I have my explanation for that, right? I can also influence you that price is going to go up. That's why like I don't like technical analysis because I want it to be quantitative, right? I want to know what the probabilities are. Like I want to know what has a better probability. Is it going to come down? Is it going to go up? And that's why a lot of hedge funds don't use technical analysis because they don't like to use discretion. They want to know exactly, okay, do I have a 60% chance it's going to come down or do I have a 100% chance it's going to go up, right? And that's why like, I've done a lot of research and I've talked to other hedge fund managers and I've talked to other quant traders and stuff like that. You'll see that the smartest traders in like the trading industry, they all have a science background because they all trade based off logic, right? And same with me, like I have my background is an attorney. So like for me, in order for me to trust something or believe something, I have to have some sort of logic behind it. And the problem with technical analysis is that there is no logic, right? It's all discretion. It's literally discretion. You can argue both ways. You can argue price is going to come up. You can argue price is going to go down. What I can see here and what I know is that my algo is telling me that price is going to come down at a certain point, right? Or it should be coming down at a certain point. So yeah, we have our next entry coming up right here in a few minutes. It um it has a 7.02 max drawdown, so it tells me that there's been like a max of like three losses that typically happen back to back. The profitability or probability here is 60%. So I like these numbers here. This is what I like. I like there to be quantitative data to tell me that okay, price is likely to come down at some point wherever my trade is listed. And it gives me probabilities that, okay, I have a 60% chance of it winning. I have a 40% chance of it losing, right? I'll take those odds. Versus me looking at the chart here and I'm like, oh, it's at a resistance, right? It might bounce or it might break above. So it just kind of depends on like what you think. And that might not even be the case, right? Like this could happen where it bounces off like that, or this can happen where it breaks above like this, or this can happen where price goes sideways. Either way, you can get screwed. The odds are not in your favor if you're looking at it that way. So just, something to keep in mind. There's it's just stuff to like maybe pay attention to. But again, like I said, there's no right or wrong way to trade technical analysis. You can argue it either way. You can look for a sell if your convictions on your strategy kind of points that way, great. Um, but what I would say is if you're going to trade that way, at least have the data behind it so that you can trust that it's going to do what it needs to do. All right, we have the target entry coming up pretty shortly, guys. I'll be looking to get into this one here. Hey, what's up, BTC? BTC said, hi, Cody. Nice to see you. I'm in the community of Lux Algo. Nice. How do you like a Lux Algo, BTC? I've talked about this with a couple other people. A lot of people don't like Lux Algo. I initially was trying to figure out like what their tools were, but I realized that their tools aren't, I mean, they're not super great in a sense. No hate on Lux Algo, but I just feel like their tools aren't, they're not as good as what they make it seem. Yeah, if you guys are wondering, like I use the Lux Algo tool for the orb. It just makes things easier for me to identify the orb. This is a free tool that they have. I feel like Lux Algo's tools, their free tools are better than their paid tools, which is ironic. But yeah, that's kind of how I see it. All right, so we have the trade coming up shortly, guys. If you guys want to get into it, let's see. Yeah, we'll see here. As long as I don't get a penny momentum here, I'll be looking. So let's see, I'll get my limit.
Submitted. Or
So we got about 10 seconds here.
order Order submitted.
All right, let's see. Oh man, of course I get a spike of volatility as soon as my order gets filled. All right, let's see if I can get in from here, or I'm already in it. Let's see. So I
Order
gotta set
filled.
this up right here. Just hoping I don't get any slippage. Yeah, it's got a little bit of rush of volatility right there. So this trade over here has a, I mean, the statistics are down here. Has a max drawdown of 7%, probability of 60, prop factor of 3, some like mixed volatility here. I might get stopped out of this, man. I got stopped out of that right there quickly. All right, it's all good. One of those trades there again. Unfortunately, took a loss. This market today is very, very random in a sense.
Order fill.
Like I don't know where this big candle came out of, but this thing came up and just spiked right through. We didn't have any pending momentum before it. It's just market shop pretty much all day today. So I took a loss on that. It's all good. I'm gonna put that in our stats over here. So loss for -1R for today. So I'm currently at -1R for the week so far. Yeah. Did get some slippage on that trade, of course. Yeah, just a little slippage on that. All right, so I took a loss right there. Like I said, I'm one and done for the day. We're at -1R. I was at break even yesterday, and now I'm at -1R. I just need one win this week to pretty much bring me back into profit. So obviously, I'm going to keep taking my algo trades as they come up. Um, Here, I'll just put the list of trades now because it's not going to matter. We're all out of our target entries for the day. So let me copy this real quick and put this over here. So here are my list of trades for the day. This trade over here at 648, this was no trade because there was a flickering momentum. We didn't have a flickering momentum right here for 721. Right here, I really thought this thing was going to either stay flat or come down eventually, but this thing just ended up spiking up immediately on that first candle. So the thing is, the momentum was identified, and I don't be surprised if this thing comes all the way back down. But like I said, so this here, yeah, look at this price come all the way back down. Unfortunately, we're just getting caught in this market chop. So right here, we had this big market chop on open. Price came up, market chop right here, market chop right here, and man, I wouldn't be surprised if this thing comes all the way back down to where it's supposed to go. We had a dead period here. Price spiked up, stopped us out, and then now it's back into profit. Yeah, just really unlucky with that volatility spike right there. Ah, well, that's frustrating. Okay, it's okay. So the thing is, my algo identified that momentum was going to spike at 721, right? That's why we took the entry right here. So what I was looking for was for volatility to spike the other way, or in our direction, of course. The reason for that was because the probabilities were here for a sell, right? So looking over here at 721, we had an overall probability of 60%, buy probability of 45, sell probability of 77, and a profit factor of 3.013. This is a pretty good profit factor right here. This shows that for every loss, there's 3 wins. And if you're doing a 1 to 2, this is basically for every loss, it's 6 wins actually. So right here, you can see price was pretty flat. And I was like, okay, this is fine because I'm going to look for this to push down. But unfortunately, we got spiked out and then now it came right back down to what we were expecting. So if you were to just ignore this green candle, basically ignore all of these big candles, you would see that it was supposed to be flat, right? So this was flat. This was flat, and then we were expecting for this to follow up after. But it's okay. Taking my loss on that trade. I'm currently at -1 R for the week. We're not really in a hole. We're just in -1 R. So today's Wednesday. My strategy is really taking one entry per day. This kind of prevents me from getting caught in drawdown, like massive drawdown. And I just need one more win. So if I get one win tomorrow, or if I get one win on Friday, that is going to bring us back into profit for the week because it's going to be a 2R. So basically, if I have one win for the day, I'm done. If I have one loss for the day, I'm done. Um, for the most part, that's kind of like how I'm applying this. But all right, there's a couple more entries here. If you guys want to look at these right here, these are going to be at 740. This is going to be against momentum. I'm not taking these trades here, but if you guys do want to take them, these are reversal entries. So 740, 749, 750 is a cluster of them down here. There's also one more with momentum. This is the one that we've been taking for the past couple days. It doesn't meet the criteria here because it doesn't reach the 2.0 profit factor. Let me go and put the criteria up here again. So this is the trade we've been taking for the past couple of days. It's been hitting, but it lost yesterday, so it knocked it down a little bit. This has a 7.88 max drawdown, overall probability of 50%. This also does meet criteria, 50% for buys, 50% for sells. So this shows that either direction could work. And the profit factor on this is 1.974. So if you guys are still looking to get into entries, I mean, feel free. Like I said, I'm not looking at technicals here, so I didn't care that price was choppy today. For one, I didn't care price was choppy, and for two, I didn't care that price was in a range, right? Like I said, I'm basing all of my trades off probabilities here. So if the probabilities show that this trade was likely to move in my direction, I take the trade there. So I only took one trade today. It was a loss for a 1R. Um, we have two more trading days. So with two more trading days, I have two more trading opportunities for this week. So I'm hoping we get a win tomorrow. And then if we get a win on Friday, so if we get two back-to-back wins tomorrow and Friday, then we'll be back at a 3R for the day or for the week. So we had a loss on, or no, we had a win on Tuesday. Wait, we had a win on Monday. And I'll just show you guys a list over here. Okay. So again, looking at this right here. So we had a win on Monday, which is right here. Let me fix this. Yeah, we had a win on Monday, which was just this one. We had what I'm going to do here is we didn't take this trade here, but I'll just put this loss. So we can document the actual trades that are taken. And all right, so looking at this right here, these are the trades that I actually took, right? So Monday over here, we took this win at 648. That was a win. Tuesday, we took a loss at 755. That was a loss. So we were at -1R. Actually, so we're currently at break even today, actually. I just realized that. So I'm basically taking one trade a day. One trade on Monday, that was a win. One trade on Tuesday, that was a loss. One trade today, which was a loss. So we're currently at break even because we had a 2R day on Monday, a -1R day yesterday, -1R day today. So if we're looking at the numbers here, we're currently at a break even. I'm at negative because of the slippage. Yeah. Yeah, I'm at negative because so I remember this trade over here, we moved our stop loss and profit and I didn't get that full 2R. So okay, that makes sense. So it was a 2R day, but I technically got like a 1R because I ended up moving my stop loss and profit, which I'm not going to do anymore. So that's why right now I'm currently at like slight negative, but for the most part, we're at break even for this week so far. Next entry is going to be at 740. If you guys have any questions, feel free to hop into the chat regarding that. But right now, we're currently looking for the next entry right here at 740. So I think this is what I'll do pretty much every day. I'll hide the list until we take all of our target entries, and then once the target entries are done, I'll put it on here so that you guys know what to follow. All right, so let's see what we got. Yeah, Paul said market is too choppy today. I'm out. Yeah, it's way too choppy. I mean, you guys can see just from the structure that I drew up here, right? Let me take off the high lows because the high lows are kind of or I guess I could leave them on. Do you guys prefer the market or my markups or my chart to be like marked up like this, or do you like it to be cleaner, guys? It's just up to you guys. If you guys want me to take it off, I'll take all the stuff off. I think this is what we typically have. But if you guys do like the high lows on there, or if you guys like the trend meter, I can keep it on there as well. Just whatever you guys prefer. It doesn't make a difference for me. See what I'm at here. Yeah, I mean, just looking at this right here. So here's the trade that we got into right there. It's just a market chop right here. I mean, it would have been impossible to survive this. Even if we had a wider stop loss, it wouldn't matter because the chop right here would have chopped us out regardless. It looks like if, I mean, it doesn't matter which direction we're trading. We took buys or sells here, you would have gone chopped out either way. Big spike up there. I think this candle was about, yeah, almost 60 points. Almost 60 point push to the upside right there. And and of course it would come right back down. Yeah, so the way that I'm doing this, guys, is I think this is probably the best way to have consistent long-term profits. If you guys can limit your trades to once a day, I mean, Justice mentioned this with his as well. I think he's still here right now, or no, he's not. He's done. So what Justice did, and I don't know if he mentioned it in the Discord. He mentioned it somewhere. But basically, so the whole gist of like what I'm doing now is what I've been doing before. It's basically one strategy or one entry per day, whether it be a win or a loss, it's fine. And we talked about this yesterday too. And look at how price is coming down. Man, if only we didn't get spiked out on this right here. I hate looking back on it, but it did exactly what we wanted to happen. Price did come down. It was just it got spiked out right here, unfortunately. But again, it wouldn't matter how far stop loss was because we would have gotten stopped out either way. Like we would have to have a 60-point stop loss to really survive that spike. But it's okay. There's no need to, it's bounce back tomorrow or bounce back the next day. But anyways, here's what I was talking about. And I gave you guys this so this is like weekly trading plan for profitability. So this is my weekly trading plan for profitability is aim to have at least 2 wins per week. Rest can be losses and still be profitable. So this is basically what I'm looking for, right? I'm looking to have at least 2 wins per week. And the reason for that is because so weekly trading plan profit for profitability using 1 to 2 risk reward. So what I mean by this, and so like Monday win plus 2R, right? Tuesday lose -1R. Wednesday loss -1R. It's break even. Thursday win plus 2R. And then Friday win plus 2R. See, if that's the case there, then total would be a positive Or let's make it realistic. Right? So total is 2 wins, 4R, 3 losses, -3R, net +1R, right? So this is basically like the game plan for the most part each week is I'm just taking one trade and that one trade is either going to give me a +2R or a -1R for the day, right? And then if you do the math here, so basically you could have 2 wins and 3 losses and still come out profitable at the end of the week. Obviously, you'd want more than this, but if you can close out each week in profit or in profit to some extent, um, these R's are the R multiples are going to add up at the end of the week. So if you have 4 back-to-back weeks where you just have 1R, that's still 4R. Or if you have more, then you can make more, right? So I'm just breaking down the numbers here. You guys just have to understand like what contract sizes to use so that you don't blow your account. And the thing is, like, if you're following the max equity drawdown, you shouldn't be able to blow your account, right? I talked to Roland about this yesterday. Like, if you calculate it to like 4 trades, if you're taking one trade per day, you can do divided by 4, right? This basically shows you that it only loses 3 days back to back at max. So you can lose 3 days and then still be profitable because once you have a win, then you'll be able to recoup those losses pretty quickly. So yeah, we'll see what we got here. Barack, nice. So Barack hit the momentum scalp, MPS V2, all TPs. CJ said breakout B3 continuation with pivot scalp playing out as well. Nice. Yeah, Barack said that momentum printed there at 32 looked like a triple confluence trade. Yeah, it did. So the sell signal right here broke and closed past the lower low right here. That was a triple confluence. So if you guys are familiar with my older strategies, I mean, they still work perfectly fine, right? They're still working as they should be. So there's an entry coming up right here, guys. This is going to be against momentum at 740. This is going to be for a buy. If you guys want to take that, I mean, feel free. Not a trade I'm looking to take, but if you guys want to take it, it's available. All right. Yeah, CJ said get those profits, Brock, because I've been holding and trailing since 710. Glad I was patient too. The algo helped me pinpoint that 710 entry for sure. Yeah, this one that happened over here, right? Because it flipped the other way. Yeah, now it's perfect. Got it from right there. All right, so if you guys are curious with the math to understand what contract size you guys want to take, here I'll put the criteria, the equation right here. The equation isn't that difficult, guys. It's actually really simple. I'm glad I explained this to Roland yesterday because it helped remind me how easy it was. So if you want how to calculate contract size, right? So if you're trading for 300K, max drawdown is 7,500, right? So divide 7,500 by 4, allowing for 4 back-to-back losses. So if you do that, I mean, so here, if you guys are curious how to calculate your contract size, you'll just do 7,500 divided by 4. Your max loss per trade will be 1,875, right? Max loss allowed per trade is 1,875. So to go further from that, since we're trading with a 30-point stop loss, right? So now divide by 30. So now you divide that by 30. This is the equation. 62.5, right? 62.5. So now divide that by 5. So your max contract size would be 12 per day, right? That's how you would calculate your contract size. This is the equation. It's basic math, guys. If you guys understand the equation, how to figure out what your contract size is. So basically, if you took one trade per day like I'm doing here, and you took a 12 contract size, you basically make it pretty much impossible to blow your account because the max drawdown is only 3 trades, and you have wins in between. So with that being the case, um, with that being the case, you'll be able to make a certain amount of profit. So you do 12. Now, if you're trying to figure out how much profit you can make per trade, so 12 times 5 times 60 divided by 2 per day, risking 1,800 to make 3,600, right? That's how you calculate the size. And this is only if you're taking one trade per day. If you want to take multiple trades, then for this here, you would just divide it by more than that. So for example, if you're taking 12 contracts, if you want to take 2 trades per day, you just divide that by 2. Now you're taking 6 contracts per trade. So your total risk is still going to add up to the same amount. So just something there to keep in mind. Man, this kind of is annoying, right? Now that so we took a loss here for a sell because we got spiked out, but look how far it dumped after. I'm like, man, the algo knew exactly where it was going to go. We got spiked out on that initial spike right there. And now it's coming down super, super heavily. It is what it is, right? This is why you have to just trust the numbers, right? So for me, I already have my cutoff with how many trades I want to take per day, right? I already lost for today, so I'm like, okay, I can't take another trade. But then I'm looking at it here and I'm like, damn, at least the analysis here was right, right? We knew the sell was going to happen. The only problem here is that we got stopped out on this big ass candle right here, and then it ended up coming right back down. It's all good. It's part of the game. It's understanding that losses are gonna happen because I could have easily jumped back in, right? If I was Barack here, and not to throw you under the bus, Barack, but if I was Barack here and I saw this coming down and I saw their entries, even though I know for example, Barack, I know discipline and consistency is it's hard for you to to stick to, right? Not just Brock, but in general, right? Like in general, like a trader, if you lost a trade here, but your game plan was to only take one trade for the day, if you started to see price dumping like this, I already know old Sean or Barack or anybody would jump into this right away, right? And I'd be happy because I would have made my loss back on this trade, but I would have never learned from it, right? It would just be another bad habit just being reinforced. This is where revenge trading and over trading comes into play, right? This is where revenge trading and over trading really messes with people's accounts. Because for me, I'm only down 2%, right? If I'm not even down 2%. I'm supposed to be break even, but because it's slippage, I'm down like maybe 1% or 2%. If you take another trade and it loses, then you kind of double up on your losses there, and then now you're in a deeper hole. So instead of just having one win for the week, you need to make 2 wins to recoup your loss. So. Yeah, Barack said I agree with him. Though I'm learning, if I see setups, I don't care how it looks. I hit it. Yeah, exactly, Barack. As long as it fits within your criteria. Yeah, so Barack said that's trade setup that he took was based off the chalk setup. Yeah, the change of character happened right there off that momentum, right? I mean, so looking at A triple confluence is basically the same as like a chalk setup, right? Or a change of character, whatever you guys want to call it. That's why I was saying like, a lot of these strategies and these names, they are basically it's a reiteration of like what we're already doing. We just call it a different name. Like our triple confluence right here, other people would call this a change of character, right? Because we have structure here, price broke past it. We had another confluence here based off the momentum. We had another confluence based off the trend, off the pivots, etc. So, same concept that a lot of people look at, whether you're calling it a change of character, a change of structure, a break of structure. I just feel like with a lot of those names, they just overcomplicate trading. And that goes back to what I was saying earlier with like technical analysis, right? Technical analysis is really confusing. I feel like technical analysis is meant to confuse the trader. That's why a lot of retail traders are just always confused because they don't know what to look at or what to focus on. But nice. So Brock's had given it the name K2 chalk combo. Yeah, definitely. MPSV2, momentum print, and continuation. That's solid. Let's see. So Daniel said, do you think that max equity loss can't exactly be relied on since every day it's different, it's a different trade that lines up. If we just happen to be unlucky and hit the loss sequence on multiple times, we could go into more drawdown than four trades. So yes, that's one of the main concerns that I've come across. Daniel, the thing here though is that a lot of these entries they usually come up at the same time, right? So now that I'm doing one trade per day, see how like 648 over here came up basically? Or I mean it didn't come up, but we didn't have the trade there. Usually the trades will align within the same cluster of entries. So we're usually going to have about the same entries for at least a 4 week rolling average, right? So for like 4 weeks, because that's where we pull the sample data, they'll usually line up with the same amount of trades. And I'm usually taking just one trade per day. So like realistically, I would basically be taking the 648 almost every time, right? If it came up, like came up to on this day, we took that on Monday at 1. I would have taken it yesterday, but it didn't come up. Um, so here's where I screwed up yesterday. Um, I was thinking back at this and I was like, damn, I shouldn't have taken that trade at 755 because I have to follow my trading plan, right? Like if I miss a trade, I shouldn't be taking the next one. Like if this trade won, which it did, I shouldn't have jumped into the set 650 the 755 one, right? Because we already had our win for the day. We were supposed to be at 2R for the week. But I took this trade at 755 and this is what kind of screwed up my criteria. I think today I kind of screwed up too, honestly, because the 648 entry over here, this trade lost, right? So I shouldn't have taken the next one. And this is something that I probably have to talk with Masij. Um, but for the most part, what I'm looking for is I'm looking for the earliest entry. Does that make sense, Daniel? Like I'm looking for the earliest entry that comes up. Like for example, over here, right? On Friday, the same thing happened. 748 didn't come up or 648. That's why I'm saying like the max drawdown is usually going to line up. But there are times where you could be unlucky and you just end up taking the, luck of the draw, of course, where you can blow your account. But for the most part, it shouldn't happen because a lot of times if they have less than an 8% max drawdown, they're not going to have continuous back-to-back losses, right? So let me go over here and show you the statistics. Like a lot of times they don't have back-to-back losses. Like if you have a loss here, well, they sometimes do have back-to-back losses, but since we're trading at different times for the most part, um, you're usually not going to overlap with those losses. But yeah, I do get your concern and I do understand that and I do follow that. That's one thing that I would try to kind of figure out what we can avoid. The main thing that we could probably do to avoid that is we just stick to a specific time, right? Like we just stick to a specific like if we want to just trade at 648 every single day, um, whether it be trade, no trade, we could do that. But I need to get so what I really need to do is we need to finish our analysis. So right now, Masij is analyzing the data. We're trying to figure out days that have or times that have entries with good enough max drawdown, good enough overall probability, and good enough profit factor over a 5 to 15 year period. So, like for example, if we see 648 and this same exact time comes up with a certain amount of win percentage and max drawdown and stuff like that, then we might just stick to that same exact entry every single day. Um, that's one thing. But yeah, the main thing that I think would kind of combat that problem would be the fact that we're always going to enter probably the first trade. And I just need to figure out whether I want to do what I just mentioned, where I only take the first trade and I'm done for the day. Or if I miss a trade, like for example, yesterday I missed this one, right? 721. Um, and then I just don't take the next one after it. I'm always looking for ways to minimize the losses on it, of course. I'm looking for ways to minimize the losses. But it's hard because it's like a balancing act. It's like you balance you try to avoid losses, but then you end up missing good trades. Or then you end up taking too many trades and you end up losing and stuff like that. So, but from what I see here, it's probably going to be a little better to do what I just mentioned. Because if that was the case here, like for example, we missed the loss over here. If I didn't take the trade here, we would have just not have a trade for the day. And yeah, I mean that's just something I got to work on for the most part. But realistically, that's kind of my thing. I'm basically looking for just one entry for the day, and it's usually going to be one of the first ones. So it's going to be between like we'll say like 640. I don't think we get trades before 640 very often. Yeah, I think 648 is probably the earliest one that usually comes up. We're not going to take the open trade, of course. Yeah, it seems like 640 is the earliest time, 648, and then 655. So it seems like 648, 655, which is not on the list right now, and 721. So like basically the first, not the open, but the first basically after the 10 minutes, the first 30 minutes of market open is usually where the algo entry would come up. So, all right, guys, it's about to be 8 o'clock. We have the next entry coming up right here at 7:55. It's going to be for a buy. It's going to be a no entry, it looks like. Damn, this thing's just waterfalling down, right? It's waterfalling down pretty strong. Yeah, so the 755 is going to be a no entry, guys. Reason for it being a no entry is because we have it's going to be with momentum. So it has a 7.88 probability, or sorry, 7.88 max drawdown, 50% probability across the board, 1.974 profit factor. And it's just yeah, we don't have no buy signal there. So it's not looking like we're going to have that opportunity. We go to the log here, turn that off. Nice. So Paul over here, he said, I saw the bearish rally coming from looking at the higher time frames, took the sell on the opening spike and got 100 points. Nice work. Yeah, Barack said, yeah, there are too many names for one thing on the market. It can indeed complicate it, but these structures are out there and it's logical irrespective of who taught it or rebranded it. Some call it chalk, some people call it. Yeah, there's way too many names, Brock. I've never actually heard of MSS before, but that makes sense. Yeah, nice work, Maria. Yeah, so Maria over here sent this link, or not link, her screenshot. So she mentioned that the reversal is going down to the yeah, it's going down to the New York low. I can see that. Let's go over here real quick. Yeah, you know what I'm gonna do here is I'm gonna keep this a little cleaner. I think it's a little too messy now. We'll use the main chart as the markup. We'll try to keep this as clean as I can. Yeah, so Maria over here identified that reversal. So the reversal happened over here around, let's see, this first one right here, right? Yeah. It's around like 7 o'clock. Yeah, so the reversal started right here at 6:36, and then the continuation happened right here closer to 7 o'clock, 6:48, up until 6:50. So 6:48 right here for a sell. Came up a little bit and then turned right back down right here. Pretty spot on. I mean, price finally broke out of the chop right here, but came down from that point there. Nice. Yeah, nice markup right there, Maria. All right, guys, if there's any other questions that you guys have, feel free to hop into the chat. Otherwise, I'm gonna wrap this up. So here are the statistics for today. I'm just gonna put no trade here, or I'll put loss no trade. I don't think there was one for a seller because the sell momentum has been, yeah. So here are the statistics overall for the for the for the week so far. So for the week so far, it's currently at, so Monday was a really, really good day. It was a plus 4R. Yesterday was a plus 1R. Today's a negative 2R. So for the day so far, it is at negative, or it's at plus 3R. So if you took every single trade that came up, it's at a plus 3R total for Monday, Tuesday, well, Wednesday. For the official trades, we're currently at break even. So we had a 2R day on Monday. We had a negative 1R day on Tuesday, and then a negative 1R day over here on Wednesday. So again, like I said before, if I would have followed my, and I'll probably have to put this somewhere. I'm gonna have to talk to Masij about this as well. So like, let's see, one trade per day, missed or skipped, not take next trade. Okay, so basically, I'm taking one. This is going to be my trading plan. I've already decided to take one trade per day. The next confirmation is basically just one trade, literally for the list. So, like for example, if I have my target entries right here, I'm only going to take one of them. So, for example, today the 648 entry came up and it was a loss, right? But I skipped it because I used my discretion to not take that trade there, right? If I skip that, I should not take the next one. I'll mark it up and I'll follow it, but I'm not going to take it. My main goal is really to take the earliest entry available because that's usually the best entries that come up, right? If you follow the entries over here that which came up, like look at these over here, right? A lot of these, if you get later into the session, the ones after 7 o'clock are usually not that great. I mean, they're okay, but they're not super great. Most of the losses happen after 7 o'clock because the volatility dies down. We start to get this random spike, right? This is kind of what screwed us today is 7 o'clock hit. Let me mark up 7 o'clock right here. So look how market was moving pretty nice from 6:30. I mean, not nice, but there's volatility there is moving. And then once 7 o'clock hit here, it started to kind of flatten out a little bit, right? And this is where we got caught in this trade because price was just going back and forth. I was expecting it to come down, but I ended up getting spiked out before it came back down lower. So this has been a thing that we looked at in the past. If you guys remember from our older strategies, we typically try to take our trade before 7:30, because after 7:30, the market starts to die out. And it's still the case here. It's like the market hasn't really changed very much. Um, but yeah, we'll keep looking at that being the case. Hopefully tomorrow we have a win. Like I said, currently right now it's at break even. If I have a win tomorrow, we're going to be back in profit. If we have a win on Friday, it's going to be back in profit even more. And that's going to be the goal. So, all right, I think that is it. Let's see. CJ said here are the entries I took on the 5 minute. Okay, perfect. CJ is sharing his entries for the day. Thanks, CJ, for sharing this. So here are CJ's entries for the day. Nice work. Yeah, so CJ took the 5 minute first three entries right here, and then took the 10 minute last two entries. Nice. So are you mainly looking on the higher time frames now, CJ? Not really on the 1 minute? Yeah, because those inches are pretty good. It looks like you took, yeah, you took some pretty, okay, cool. Are you running the algo on those time frames, or are you just kind of looking at the because I know you're taking market flow V2s and stuff like that. I'm just asking. I'm not asking this, but I'm asking this for other people because I already know people are going to bother you. They're gonna ask about this later. I could already anticipate questions coming into the Discord. So yeah, do you gotcha. Okay, yeah. So CJ said the M. Nice, nice, yeah. So CJ said he's using Bernard all the way. The market flow V2s line up perfectly with the five. Okay, perfect. So you use the algo to identify possible pushes, and then you use that in conjunction with the actual strategy, right? Just to clear that up. Okay, perfect. So there you go, guys. CJ here used the algo to identify momentum pushes, but he didn't get in exactly at the algo time. He used the strategies to go in line with what he was looking for. So, yeah, so these first two right here are market flow V2s, right, CJ? I just want to confirm it so I can kind of give a explanation. Or were these different strategies? I'm just kind of curious. Okay, 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 okay. So the opposite. Okay, so CJ uses the algo to get in, but CJ uses the strategies as confluence. Okay, so you do the opposite. No, that's better. That's actually better that way. It's you get in at the algo times because it tells you, okay, price is going to push up, and but you use the strategy as a confluence. So you know that the strategy is going to push up, and the algo tells you to take a buy, so you take a buy there regardless. So this was against momentum, but like CJ here doesn't care about that stuff, right? He just cares about taking the trade in that direction or whatnot. So okay, that makes a lot of sense. And that's actually better. It's better that you're doing it this way versus backwards, right? You're doing it where algo comes first, strategy comes second. Same with what we talked about before, right? The algo comes first, technical analysis comes second. It's just the confluence on top of it. Okay, nice work, CJ. Question from Paul. Paul's asking, all trades you took are 60/30? Gotcha, okay. Yeah, so one last question from Paul CJ. Paul's asking what TP stop losses are you using? I think you use a 40/80, right? Or I don't know. I know on the 10 minute you use a 40/80 or 80/40. Um, okay, gotcha. So CJ confirmed on the 5 minute 60/30, 10 minute 80/40. Okay, no, that's great. But yeah, these are really good entries right here, CJ. Really, really good entries right there. All right, cool. So I think that's going to be it for the day, guys. If you guys have any questions, feel free to hit me up on Discord. Otherwise, thanks, CJ, for sharing that. Basically, again, if you guys didn't hear what we just talked about, CJ is basically using the algo to identify entries to get in, but using the strategies as a confluence. So, I'm kind of curious. What time was that entry right here, CJ? Let me see. Around the 1 minute. It was on the 6:45, I'm assuming. Okay, cool. 6:45. I'm just curious to see like what the I could keep it on the 1 minute actually. I'm curious to see like um what the criteria looked like from there. So 6:45. I think you got in from 6:45, right? I'm just curious to see like what the probability was at that time. 6:45, this was against momentum. I might not be doing this right, but yeah. Do you run it through the 1 minute or do you run your data through like the five? See, I'm assuming you do it through the five, right? It's got to be through the five, yeah. 6:45. Let's see. Oh, okay, okay. 6:40. Yeah, it was the minute before. Okay, gotcha. Yeah, so that was the question that I was going to ask you. So I was like wondering if you okay. Okay, it's actually really good right there. Yeah. So 6:40 was against momentum. 5 minute was the 50%. Okay, gotcha. So if you guys want to do what CJ's doing, basically you can run the statistics on like the 1 minute, 5 minute, and 10 minute. Maybe I'll do that too. Maybe yeah, because if I have downtime, might as well do that. So yeah, if I have some time, I guess I'll run the data for both the 1 minute, 5, 10, because the 5 and 10 doesn't take as long to pull the data because you're going through less entries. But all right, yeah, no, that's cool, CJ. I'm gonna look at that because if we have the multiple time frames kind of line up with the 1 minute, the odds of that one is probably gonna hit more likely. So that's one thing that we did too. Let's go back to, and you guys are still here, so glad you guys are still hanging around. Let me show you guys the algo entries. I'm thinking like maybe it would be better to go back to how I was originally doing it, right? I mean, this took me a long time to do. It took me a couple hours to do it, but if you guys remember the original list, I had these right here, right? Where I had the different risk to rewards. And we were doing really, really good in October. Like whenever I had these over here, like listed and they were like kind of stacked with different risk to rewards, like these entries would usually hit pretty nicely. So I'm like, I'm thinking if I mean it doesn't even have to be by time frame. I think what I can look for is really just going to be I just got to run it through different RRs, right? Because I'm looking at this here. I mean, and I'm glad that we're reviewing this because this is actually giving me more ideas. So like if we go to October here, yeah, we had way more wins because I was more focused on these entries that kind of had listed yeah, like for example over here on the 9th, right? I mean it was a loss, but whenever we have these kind of aligned like this where there's like multiple risk to rewards that are hitting, it they actually had a little bit of a higher probability. One thing that Masij was telling me too is that when I use the weighted average, it was a little more strict what we have right now. So what I might have to factor in again is I might put the weighted average back into our criteria. Yeah, because what he mentioned was that the win rate's actually high. The wins are actually more aligned with the weighted average. So yeah, it's going to take me a little bit longer to put these lists together, but I think this actually helps a lot better. What the thing that I don't think is really relevant is the back-to-back losses. I think that stuff isn't really as relevant as the other stuff. But all right, well, I have ideas now. I think moving forward, I'll probably have a lot more ideas as we continue along. But yeah, we'll see. Yeah, CJ said yes. That's what I was saying. I don't believe our win rate in October was a fluke because I stayed consistent in winning using the original way. Okay, so that's good to know. I mean, what we have here is good. I think we're still going to factor in max equity drawdown and whatnot. But I think we just have to have more data, honestly. Like I feel like I got kind of lazy with this list because I thought, okay, we don't really need that much information. But now that I'm like thinking back on it, we had way more information the first time I gave out the trades, right? So this is the first day we took the algo on the 9th. We had way more trades that were listed, and we were able to identify like a better cluster of trades. Like for example, over here, if we had all these trades listed at 507, this was like, okay. 507 is actually a good time to take a trade. Or for example, here, if we have all of these at 751, it's like, all right, for sure, we should probably take this trade here at 751 because the criteria is met. So, all right, yeah, this just gives me a better understanding of like what we should focus on. I think we should have more data is going to be better instead of trying to just focus on like on these like what I currently have right now. So basically, if you guys have seen the list, I'm gonna include the weighted average. I think that's gonna be the main thing. And then I will probably have another thing over here that has like the risk to reward. And then I'll have like more listed trades. I just need to change the criteria a little bit. I gotta figure out, I gotta remember what my criteria was before. I think it was at like, I think I only listed trades that had above a certain percentage. But okay, okay, no, that gives me something to work with. But yeah, if you guys have any questions, feel free to let me know. Otherwise, I'm gonna get to working right now. I'm gonna get to working. I'm gonna get this list of trades for you for tomorrow. Yeah, okay, I'm excited. I'm excited because now I kind of know what to focus on, and then we can kind of drill down, and hopefully we'll have another win um on Thursday and Friday. Obviously, the more data, the better. Either way, I mean the strategy is not bad as is. I think right now it's just the there we have a lot of no entries. I think that's what's kind of throwing me off the most versus what we had back in October, where we had a lot of entries and they were all actually coming up. But all right, guys, I'm gonna get back to the drawing board. I'm gonna try to start the list. It's gonna take me longer to put that list together, but it's okay. Usually this takes me about 30 minutes to do, but this new list might take me about an hour, maybe 2 hours. But all right, guys, I'll catch you guys later. If you guys have any questions, feel free to hit me up on Discord. Otherwise, I'm gonna get to getting this list together for tomorrow, and hopefully it'll help us pinpoint the best possible entry that we can take so that we can continue on and bounce back for this week. So, all right, guys, I'll catch you guys here tomorrow. If you guys have any questions, hit me up. Otherwise, I will see you guys on the next live session.